Okay, so we're ready to do the purchases journal and the ledgers now. My last video, which was 6 days ago, today's January 19, that was January 13, I did sales journal and the ledgers. That is sales journal, the sales ledger, and the general ledger. So remember, we always move from original entry to double entry. Original entry being the journals, then to the double entry being the ledgers. So we move from sales journal to the sales ledger, then the general ledger. So now we're going to look at the purchases journal and the ledgers. That is purchases journal, purchases ledger, and the general ledger. Just for a recap, so last class we looked at the question. Remember that the journal would always have credit sales, credit purchases, and so on. So we did these two last class. I'll just highlight them, and you can always do that so you remember what you'd have done when you're doing a question. You can just tick off the question that you would have completed. All right. And remember, cash sales is not on credit, so it would go to the cash book. So we did not record that in our sales journal. Whenever you see cash purchases, cash sales, those go to the cash book, which I'll create a video for shortly. Kindly note, however, that when it comes on to sales, purchases, return inward, return outwards, those are all movement of stock. So whenever you see goods or stock or inventory, you know you're tracking the movement of stock. If you see bought machinery or sold machinery, that is the machinery account and not any of the accounts that would be used to record stock. So let's go now. So now we're going to do the purchases journal. So in other words, what are some goods that we bought on credit? So bought goods on credit from K. Smith January 1 for $2,000. That fits the criteria. Bought goods again on credit from H. Brown. That also fits the criteria. We're going to do those two. J. Spencer returned goods to us. That would not fit it. Neither would January 14 where we return goods. Those are returned outwards and returned inwards. All right, so let's go. So the first thing we do, we put in our information. All right, so January 1, we put in the year 2024, and then the date. The date was January 1. And who did we buy the goods from? The goods were bought from K. Smith. All right. And then invoice number, we can just meet that up. So 891. The folio now tells where the information is going. It's going to the purchases ledger. It's coming from the purchases journal to go to the purchases ledger. So from original entry to double entry. All right, let's continue. The total was $2,000. And then we had two transactions for January. So we bought goods 2 times. And January 10, we bought from H. Brown. The invoice number will continue in the same order, 892. And of course, it's going to the purchases ledger. They may give you a number for the ledger. But for now, what I want you to understand is the entire principle of how it works. And then total would be 950 worth of goods we bought from H. Brown. So now we have to draw our total line. The total should be 2,950, and we have to double line that. Of course, we have to always put our details, and the purchases journal total will go to the general ledger as the purchases account, because everything we bought here would be the purchases from the month, the total credit purchases that is, and the total is 2,950. All right, so now we're going to move on to the purchases ledger. So the purchases ledger would have all the accounts of our creditors. Remember, creditors are people who buy goods on credit from. And of course, we owe them money. So therefore, they are liabilities to us. The double entry rule states that liabilities increase, you're going to credit. So let's go. The first account would be K. Smith. And the second account that we draw up would be that for H. Brown. All right. So we're going to credit the accounts because they are liabilities, they are creditors. So 2024, put in the date on the credit side. Then we know it's January 1, and the details would be purchases. And the folio here tells where the information is coming from. The information was actually coming from the purchases journal, which we just did. So we put PJ. They may give you a number, as I said, but the principle is important to understand first. And then, of course, the amount we bought goods on credit from K. Smith for was $2,000. And now we do the same thing for H. Brown. All right, there we go. So we're going to move on now to general ledger, to our purchases account, because we have to put the total purchases here. And that is how we'll get the trial balance to agree with the amount in the ledger of 2950 on the credit side, with the purchases account debit side in the trial balance of 2950. So we know that purchases are, it tracks movement of stock. So stock, inventory, goods, it's an asset. When asset increase, we debit. So we know that we're going to debit our purchases account at all times. I've heard the explanation that when you buy goods to sell, it's an expense because you have to buy these things to keep the business going, and expenses are always debited. That's a rationale you could think about too. But I tend to prefer that it's movement of stock and assets increase because stock is an asset. So you always debit purchases. So put the date, January 31, and the details will be the total credit purchases for the month. All right. And then the folio, where is it coming from? It's coming from the purchases journal, and the total was 2950. And that's how we work the purchases account in the general ledger, the accounts for our creditors in the purchases ledger, and of course, the purchases journal itself. All right. So I hope this would have shed some light for you. It's pretty easy. And then the next thing I'll look at would be our return inwards and return outwards in the next video. Stay tuned.